All right. Good morning, everybody. Welcome. Welcome, welcome. We are rolling. It is the Wednesday webinar post-election. And let's see here. Let me switch this over. I have a special guest. It's been a busy week. Aside from election, earnings, everything that's going on here, I have a special guest. So let me just reach down here. Try not to wake her up. Hi, everybody. Meet. Oh, God, I can't wake her up. I'm waking her up. This is Eden Rose. You were just born, weren't you, sweetie? November 1st at 11:20. She sleeps a lot and eats a lot. She's doing really well. I'm just going to put her down here. Mom's going to come get her in a second. Welcome to your first webinar at 1 week old. Okay. Forgive me, had to do it. She's a sweetheart. All right, guys. Good morning. Yeah, it's been crazy. What a week. What a week. Volatility, elections, coming out of heavy earnings. Had my third kid. Yeah, it's been amazing. So I wasn't sure I was going to do this one today just because obviously I'm not going to be as prepared, but I do have some market thoughts I want to share with you. Good futures movement overnight. I was up late. I was actually trading the trading the midterms quite a bit, trading some S&P futures, just moving around. So, yeah, yeah. Thanks, everybody. Appreciate that. Yeah, thank you. She's great. She's great. She's sleeping. She's up 2-3 times a night to feed, and it's fine. You know, my twins who are almost 5 continue to be the most challenging. Oh, my God. Anyways, those of you who are parents, you can only understand. This sun's going to be a little bit of an issue, but forgive me. We're gonna roll through it. We are still in a temporary location. As I mentioned, we will be moving to our full-time. We just bought a house in upstate New York in Saratoga Springs. I'm very excited. Have a full studio set up. We're just working on a temp little setup here. So just bear with us as we're getting started, get used to life as a YouTube streamer here. And if she does start crying, you'll have to give me 30 seconds as I run up and bring her back to my wife, who's not supposed to be up and down stairs. Okay, guys, so let's take a look what happened here. We've got the futures, pretty good bid here post-election. Gave up the House, picked up 3 seats in the Senate on the Republican side. I think the main kind of theme going forward will be gridlock. I'm really interested to see what kind of sectors are impacted today. I'm very interested to know like what healthcare is going to do. XLV, I'd like to take a look at some of the healthcare stocks. Infrastructure, probably, you know, any kind of infrastructure deal, probably not going to get done. You don't think that they're going to let it through the House before the 2020 election, so you want to see what XLB is doing, those materials. Bonds were super bid overnight as the dollar was selling off. Dollar sold off pretty hard, so definitely some good movement in here, okay? All right. So let's take a look here. You know, let's go through. I was actually trading a lot of futures overnight. I made some money, did pretty good, but it was a fight. So let's take a look at some of these charts and just kind of get the flow of the evening here. So here's the S&P coming up here, and you can see that style settings. There we go. Okay. So initially when it was reported that the Republicans were going to lose the House, the market sold off. We did kind of a 3-wave little push. I was short for this move. tried to reshort. We got stopped here, and that's when the rally really began. I'm not sure what broke at 3 in the morning to really rock us higher up to 27.87, but that's a pretty good test there. Nasdaq's going to look very similar here. The initial sell-off when we got word that the Democrats were going to take the House, rally up, reset, triple bottom, rally up. There was a lot of movement in the bonds, and you know, that's obviously it's interesting. I mean, this has all of a sudden gone from a hawkish rate environment to this kind of move, which starts to suggest that maybe this rally up in bonds is start to indicate that maybe we won't have the kind of pressure on the Fed to raise rates. So perhaps we're seeing that move up in the bonds, push lower in interest rates, and the dollar was a they took our dollar index away. So annoying. So here's the euro dollar overnight from 114.40 up to 114.50. A strengthening euro is a weakening dollar. Gold really didn't do all that much. Yeah, it traded up to 12.38. It's backed off a little bit, but gold is pretty quiet. So let's start in here on the indexes, kind of show you where I'm at. And again, you know, we've been doing this for 3 weeks. Oh God. I was just going to make an excuse, or I was just going to say I'm not used to this. And you guys just weren't able to see that. Blew it. All right, well, I was just taking you through the night. Sorry I didn't make that live. As I was just saying, I'm still getting used to this software. So blew that one, but you guys didn't miss that much. Now I know that I wasn't sharing screen, but that's all right. We're going to jump in, and I'm sure my team was just texting me saying share your screen there. So all right, so let's dive in. This is the important stuff. I'm just kind of recapping what was happening there overnight in the futures market. So here we go. I still think, guys, that we are inside of a triangle here. There is a lot of evidence to suggest that we are sideways in this S&P. Okay, and I do see the comments scrolling over here. And again, bear with us. I don't have this set up exactly the way I'd like in terms of streaming your comments to me in real time. This is something I'm going to learn as we kind of evolve with this show. So don't judge this as the finished product of all we're going to offer on this Wednesday. This is just kind of warm up for fun. And then when we get a little bit more settled, I'm going to bring the heat for you. So don't judge us on this production. Okay, so again, I do think we're in a longer term triangle here. Let's go out to the weekly, kind of scale that in a little bit. One possible interpretation is that we are in the midst of a 5-wave move, and we probably have wave 4 ongoing with one more push to go. I think the 2018 price action has been mostly defined as wave 4 correction, which would be followed up by a wave 5 rally into a whole wall of resistance. So one more push into 3,000, 32, maybe 3,300. At that point, that's when I think we're going to see the sell-off. This move up in the bonds is real. You're not going to get, you know, the Fed might be, you know, the pressure might be coming off the Fed here. Who knows? It's not until you start to get the Fed, I think, really starting to raise rates and committing to consecutive rate hikes to choke off the economy is when you'll start to get a top. And if my team's trying to text me, my phone is somewhere over there. So if I'm doing something wrong or breaking something, I'm rolling with it. Okay. So inside of this wave 4, let's kind of take a look at the 195 here and give you the details here. So this is the triangle that I'm looking at. And before I go any further, let me just show you what a triangle is. And those of you who are not familiar with Elliott wave, it's a pattern recognition methodology. It gauges the conviction of buyers and sellers within different kind of phases of market trend, whether it's trend or correction. And there's really 3 main kinds of corrections. Okay, there's only really 3 corrections in the Elliott wave world. If, let's say, for example, that this market is in an uptrend, all right, so let's just kind of draw a line here. We're going to copy it, pull that back, okay. Let me just pull that over, copy, paste. Let's just draw a basic market model, okay? So you would say that that is a market that consists of higher highs and higher lows, right? That's an uptrend. And the whole purpose of trading, guys, is if you're a trend trader, you're trading the underlying stock or futures or crypto or Forex, you want to try to buy the pullback against the predominant trend that's in place, right? So let me go like this. Commentary. So you want to try to buy the pullback here against the predominant trend before the trend resumes. Elliott wave is wonderful in that it helps to identify what these corrective waves may be. And there's only 3 kinds of corrections in the world of Elliott wave. And they are the ABC correction, show lines. They are, this is called the zigzag right here. This one where B goes up and retests the old highs as C retests the old lows, that one's called a flat. Okay. Let me just get that in there. Properties, show lines. And the third and final is called a triangle. And a triangle is nothing more than a consolidation pattern of lower highs and higher lows. Buyers are getting more aggressive on the downside. Sellers are getting more aggressive on the top side until they come to a point where the resolution of the conflict must happen, and then we'll get a move up out of the range. So let me go over here. So these are the 3 kinds of corrections according to the Elliott wave world. A zigzag, a flat, and a triangle. That's it, okay? Zigzag goes down, B wave false break, C wave to a new low. This is the flat. A, B false breakout up here, C wave false break down here, and then we resume up. The triangles I just described, 5 swings, lower highs, higher lows, okay? That's it. Those are the 3 corrections in the Elliott wave world. So if we apply it to the market as it is now, okay? Let me go back out to the S&P. Using that model that I just gave you, what does this look like? Well, for me, do you want to bring her up? She's okay right now.
Yeah, when you can.
Yep.
Okay.
I'll bring her up in just a sec. Okay, guys? So the way I have this traced out right now is I think we are in a triangle. Okay, and what's going to happen is it's a 5-wave swing. It's A, it's B, it's C. We have a D wave rally to go, followed by an E wave correction. Once that's complete, then we'll have the rally up in wave 4 completion, up in wave 5. It's a bit of an extended triangle. It doesn't look very obvious yet, but the implications for the S&P over the next week or so are as follows. If we're going to get a D wave rally, we need to go up, trace out something that looks like a B wave correction, and then move on up to C of D. Okay, so it's going to be up towards about 2,800, a pullback towards 2,700, rally up here. You don't want to try to get caught buying the breakout because the triangle says there's usually 5 swings. The initial January decline was 1. The rally up to September highs was 2. This decline in October was 3. This is the 4th rally right here, followed by one more setback, which is going to be a 5-wave triangle completion. Then we move higher. So inside of the daily, guys, and what you got to do is you got to shift your time frames, right? I can't see what I need to see. Let me keep my finger in the screen. I can't see what I need to see on the daily here. This is the daily chart. So I need to switch off the daily down to the 195, okay, to get more granularity here. Now, each swing in the triangle, A, B, C, D, and E, Each of those smaller waves are 3-wave moves. So the decline that I see so far is A, B, C down in C. Wondering if we have some kind of B wave correction to come. The gap this morning is going to push up towards some pretty critical resistance, which I'm wondering if that does not hold. If it doesn't hold, and I'll show you why back in the daily, but that's going to set back for B. Then we rally up. At that point, everyone's going to convince the breakout's coming, but don't get caught because we have one more swing down to come and eat. That's going to be the buy point. So, guys, I'm wondering for the rest of the year if we might still be caught in this triangle. If you look down at the x-axis, that takes us into January. We're coming into a seasonally strong period, November to April, and that's actually going to match up fairly well. There are some very prominent people in the Elliott Wave world who are looking for an absolute top. Okay, I'm shifting gears to an alternate count. And let's just talk about this for a second here. As I've said before, guys, I always have an alternate count. You always go to war, go to battle, start a business. You always have plan A and you always have plan B. Sometimes you even have plan C and D. You have a preferred way in which you want to conduct your war, your operation, your business deal, your trade. And if it doesn't happen, you need to have a contingency plan such that you can shift courses, minimize the damage, and then move towards the path of progress. That's trading. I can't tell you what's going to happen today at the bell or tomorrow or next week. You can't predict the future, and we're not in the game of predicting the future. We're in the game of interpreting the markets and setting ourselves up for multiple courses of action that offer the least risk for the most amount of reward. So a lot of people who are new to Elliott or trading, either technical analysis or fundamental analysis, would say, well, I got to know exactly what I'm going to do. Dude, try running your life that way and say, this is exactly what I'm going to do. You better have contingency plans. So with that said, guys, I do need to take a 1-minute break. I will be right back. I've got to bring the baby up. My wife's not supposed to be up and down the stairs, but I wanted her to meet you guys. Give me 1 minute, guys. Okay, sweetie. Okay, here we go. Okay, back. Mom had a C-section, so she's not supposed to be up and down those stairs. All right, so thanks for bearing with me. Okay, so that's kind of my outlook on the market. Let's take a look at bonds. Bonds had a really good push up there, and let me just take a look over at questions here. Yes, thank you. This will be recorded later. And again, I know you're probably tired of hearing it, but I will find a way to stream the questions right into my software here so I can just interact with you in real time. I got to look all the way over here to get your questions. Normally, I like to engage a lot more, so just understand that. Okay, so bonds. My distillery partner. Okay. So bonds are interesting. Bonds are interesting. We have sold off from July of 2016 a big A, a big B, and a big C. Now, how do you know if it's an ABC pullback or if it's, in fact, a bond top and we are going to absolutely get hammered? That would be a label of 1, 2, and we're selling down in 3. One of the ways that you determine whether this is an ABC pullback that should be bought for new highs or if it's a 1, 2, 3 wave new downtrend that should be sold is the interaction at the 100% relationship of the first swing compared to the third swing. And the C versus A 100% is going to be right here at 130. We haven't even gotten there yet. If this is a C wave, we should stop somewhere inside of this zone. Okay? Typically, the C wave will be about 100 or 61% of A. Right now, we're below the 61, but we're not quite at 100. If this is a good wave 3, typically your wave 3 in the Elliott wave model looks like that. Where wave 3 is the extended or long wave. Wave 3, the middle wave, whether it's an uptrend or downtrend, that's usually the longest wave. So what I'm saying is you'll want to take the distance traveled in 1, project it up in 3, that 100%, that's going to be your minimum objective for a wave 3. So if I use my Motive Wave software here, go ratio analysis 3v1, 100% is going to be right here at 164. So if we're rallying in this fictitious market, you minimum want to get to 164 and then up to the green fib, which is 1618. That suggests a trend wave. So flipped over to the bonds, 100% is right here at 130. 1618 is all the way down here at 115. So what I'm saying is we have evidence that we're starting to stop inside of the C wave between the 61 and 100%. That suggests that, take it to our fictitious market, this isn't 1, 2, and 3, but in fact it's A, B, C, like this. It's ABC that should be sold for a new low. Okay, this is obviously an uptrending example that I'm using. Further, I can count 5 waves down inside of C. In your typical ABC zigzag, that's that first Elliott wave correction that I gave you, A, B, C. If this is the daily chart and get down to 195-minute, which is a half-day chart, it's going to look like this. Something that resembles this. 5 down, 3 up, and 5 down. So it's going to be 5 down, 3 up, 5 down. Further, as I keep saying, that C wave, if it stops at a 61% or 100% multiple of A, that suggests deep correction that should be bought. Okay? So if I were to leave it at 100, it'd be something like that. Stop right there at 100% and rally up. I count 5 down, 3 up, 5 down in bonds. So with this midterm election result, I'm wondering, you know, do we have the 5 waves down, 3 up, and a completed 5 wave down? We were talking about the triangle. What if we got off of this weekly chart, went down to the daily? There's that blue C wave that I looked at right there. C wave needs to be 5 waves. There's 3 corrections that I mentioned: zigzag, flat, and triangle. A triangle will only happen in the 4th wave. That could be wave 4 of C, meaning we have one more push down, and then we're going to start moving higher. It could be the end of an ABC correction from the July 16 top in bonds, and then we're going to start to move up. So if that's the case, if bonds are going to start moving up, we'll see. This is a pretty bold call that I'm making. I'm not trading it, but here's what will happen. The dollar strength will start to come off. The emerging markets that we've talked about, and I've been focusing on a lot, emerging markets, China, a lot of countries that have been impacted by the strong dollar and pressure in their equity markets, which has been exported over here, will come off. So if this scenario plays out, we're going to start to get dollar weakness, and some of these commodity currencies can come back. Inflation starts to come back, commodities get a bid. That's when the inflation starts to pick up. The Fed needs to ratchet down, start raising rates, and maybe finally invert that yield curve, which finally sells the market off into that wave 5 top. So if we spin over here to some of the emerging markets, I don't have a wave count on this, but I find this EEM chart very interesting. Emerging Markets ETF, it's about 50% Asia. Okay, South Korea, mainland China, Singapore, all the technology, all the wonderful industries out of Asia. So it's heavily influenced by Asian equity prices. But if you look at the drop here, and I'm doing some fib analysis, first thing I want to do is I want to take this swing down back in 2014 to 15, that distance. I'm going to put that 61% multiple on it. Okay, that's going to be that red line bouncing up and down right now. See that 61%? Let me get that 786 out of the way. See that 618 that's moving up and down? If I attach it to the top of price, that's at 3807. Further, what if we did a traditional Fibonacci retracement of the 2016 to 18 rally in E? Oh my God, wait. Okay, you didn't miss anything. Sorry, I promise I'll get this. I was up too late watching the elections. Here it is again. Boy, this is going to be a bad recording. This is EEM. This is going to be the 2014 to 16 drop. The 61% relationship is that red line that's bouncing up and down right now to the right side of the chart. Okay. Further, we have the retracement of the 14 to 16 rally, which is right here. A 50% price retracement is that blue line that's bouncing up and down now as I'm moving my cursor. That is a very key fib zone that's actually held before this midterm elections. This is a weekly chart. We did a big outside reversal on emerging markets right here. See, we did this bar completely encompassed the week of the 21st. 27th price action engulfed the prior week's price action. Okay, that's a buy signal. Okay, and with this move up in bonds, down in the dollar, I'm wondering if this beaten down EEM chart is going to come back to life. And if we go like this, let's just overlay the SPY on top of it. Look at the difference. Look at the divergence between the S&P and the emerging markets. This is a massive divergence that needs to be unwound. Look how tightly they were trading for 16 into 18, but then look, S&P moves to new highs as the emerging market comes off. That can't continue. Either S&P sells off or the emerging markets rally. We can't continue to go so in such a bifurcated manner. So I'm wondering, through all the dynamics that we just mentioned, are emerging markets about to pick back up? And if you look at FXI, it's basically the same chart. Okay, this is the Chinese ETF that tracks the largest corporations in Hong Kong and Hang Seng. Did a pretty big double top. We're settling down here a little bit. You could do that same kind of fib study on the way up. Okay, we're right into the 61% retracement in FXI. Same kind of engulfing price action that we saw on the weekly chart. Let me pull that over. Big outside reversal bar there compared to the week of the 21st. That also looks like a good signal. And again, that weakening dollar is going to help if this dynamic that we're seeing on the open is for real. I was going to bring my Forex guy in. I'm not yet good enough on this software to do it. I don't want to press my luck. I can barely put the right screen up at the right time. But here's what we're looking at in the dollar. Okay, dollar did a three-wave move. And if you were listening to what I said, or if you studied any Elliott wave, what are the three kinds of Elliott corrections? There's a flat, there's a zigzag, and there's a triangle. A triangle can never happen in a second wave, in a bigger second wave. So this has either got to be a flat or a zigzag. Just to kind of skip to the point, if you haven't studied your Elliott wave yet, B wave can't break a new high if it's a zigzag. This must be a flat. A flat is the only Elliott wave correction that has 5 waves in the C wave. So I know, I haven't spoken to my Forex guy yet, Alex, who runs our Forex service. He's an ex-bank trader, very good Elliottician. He's chomping at the bit to sell dollar, and I was like, I don't see it, but I know without even talking to him, he's going to be looking at this count. Okay? In fact, he did send me some charts, so let me see if I can pull those up quickly. Let's see. Here we go. Okay, and here's a perfect one. I'm just showing you our Slack channel. This is the Aussie dollar. This is the first chart that I pulled up from my guy Alex, and I don't want to. He's waiting to be a guest, but I don't want to press our luck. I'm already blowing this webinar this morning. But this is the Aussie dollar. He's looking at a completed 5-wave move up, possibly a sell-off, and then a nice rally up towards about 74, 75 in Aussie. Aussie is a commodity-based currency, heavily correlated to Asian equity performance. So I do like the looks of that. Aussie dollar looks like we could be on a pretty good push. So good job there. The dollar, that just matches up. This is the dollar selling off in 5 waves of a flat. Okay, so a lot of good things can happen if the dollar sells off, I think, in this market. If the dollar rallies based on bond market strength, I think volatility source from the increase in interest rates is for real. A couple of things I think are interesting, and then how are we doing? I'm going to turn it over to questions here in 1 sec and just kind of get through the points. XLB is a beautiful correction that we've seen here. A into triangle B, and we've kind of focused on corrections here. Triangles can happen in either wave 4 or wave B. This looks to be A, triangle B, down in C. A beautiful 161% A versus C relationship. A nice strong rally up last week, and looks like we're going to get follow through. Materials are something that I'm interested from a technical point of view. Let's see. I don't think they're going to get any kind of infrastructure done right now with the gridlocked administration, so we'll see if materials come under pressure. Some other sectors that I'm keeping an eye on. Financials aren't going to trade very well with this move down in rates. They are going to come under pressure. They have been underperforming. I think technology has the ability to recover. Technology generally does better in a weaker dollar environment because they're multinational and their ties to Asia. Some stocks that I'm looking at on the pullback. Netflix looks really nice, really good here. I've been looking at Netflix here as just a big 3-wave sell-off, big week down there on the 27th. We've had a little consolidation here this week. Deep fib support zone. We even have some Fibonacci time coming in there. Netflix above 320, 322 is something we're probably going to get involved in on the long side with our subscribers. Let's focus on big cap tech. Apple's another one that I think is looking interesting here on the buy side, despite all its craziness around earnings not reporting unit sales, and a lot of people are pretty pissed off about that. But from a technical point of view, it looks to be just another A, consolidation B, down in C. Support zone exists from 205 down to 196. If you're wrong, below 190, cut it, trade is wrong. So you've got about a $15 window here for a pending wave 5 ride towards 250 or north. So you got $45 of upside with $15 of downside. That's a stock I'm interested in. Another one is Google. Google's been beaten down, but actually looks pretty decent. Same kind of correction. Does anybody know? Well, you can't tell yet. I'm thinking that we are in a wave 4 consolidation here in Google. As I get off the weekly down to the daily, on the YouTube channel over here, what kind of correction is blue wave 4 in Google? And I will bring up Netflix. I see you asking, Artie Visual. Oh, and you guys are answering each other's questions too. Yeah, 195-minute is a half-day chart. So 360 stock market hours divided by 2 is 195. So it's just a half-day chart. Falconized, you got it. It's a beautiful flat. So Google did 3 down. This is kind of a funky 3-wave up. But you know what? You can't call that a 5, right? A 5 has no overlap between 4 and 2. So, you know, what are you going to do? 1, 2, 3, 4? 4 moves in the area of 2. That's no good. You know, that doesn't really work. So this looks to be a kind of a corrective move to new highs. Now we're getting the 5-wave move down. I don't know if we have one more push or not, but the old A-wave lows are going to be around 980. So I have enough to secure the C of 4 low here and just get long. But if we want to put one more low in sub 1,000, we could do it. I don't think we're going to get it, so I probably just need to do something like this. That's really ugly, though. I just want to make sure that wave 3 can be a 5-wave move. You always want to make sure your wave 3 is a 5, and that works. It's not the prettiest, but it works. So Google is down into some support as well. So tech looks good. Netflix is another one. I am interested. I actually probably will put a trade on. Let me talk about Microsoft first. No wave count yet on this pullback, but just look at it. Just look at it. It goes down, up, bunch of stop runs towards 100, a lot of long candles if we switch that over there. There's a lot of stop pushing down towards 100. It looks like the market spoke, and I think any kind of weakness here can be bought in Microsoft. So technology for me is looking better. Cisco, old school tech, also looking better. Above the 200-day moving average, which a lot of tech is not. Nasdaq is below the 200-day moving average. So Cisco looks good. All right, let's bring up Netflix. I know you guys are asking about that. NFLX. Okay. I already went over it, actually, but it's WXY. So why do I label it WXY? So if we get off the weekly down to the daily, I'm seeing 3 down in W. And C wave itself was a 5-wave move, 3 waves up, and then another A, B, C. So basically it's ABC connected to an ABC. Down into deep support around the 280 mark, began to move up. If we get a push above 320 in Netflix, I think we're going to go. So I'm kind of bullish here for now. I do know there's some prominent Elliott wave figures who are bearish right away. There was one other interpretation that I'm following. I'm following the bearish count that we could absolutely drop away, and I'm following that very closely. But for now, I'm just going to kind of trade towards the side of a triangle. I do have some positions on here in the SPX. I'm trading very lightly with my members here. I've kind of made it a commitment to them to trade lightly around the birth of my daughter. You're not supposed to trade around big, market events or big life events. So let me just show you what I'm doing here. I did a little butterfly yesterday. We were trading 2760 area into the close yesterday. I did a 2775, 2800, 2825 call butterfly. And if you go over here to the Analyze tab and go SPX, I'll show you the risk profile for this. That's definitely not it. There we go. Okay, so here's what we're looking at. So we should open around 27. My futures quotes are hidden here. We should open around 27, I think 85 to 84 here. So it will start to move into profitability here. This guy expires on the 16th. So I got a little bit of time here, but starting to move up towards that zone around 2800. That is going to be the key breakout level. I'm going to finish the analysis circling back to the S&P on that 2800. There's a lot of wood to chop here at 2800. And here's why. On the S&P, putting the Elliott wave stuff aside for now, you've got a trend channel that is sourced from the June 2016 low, touch point in November of 16, a couple touch points here in April and May of 18. That's the blue dotted line. We've broken through it after an initial successful test, sold off. We're coming back to it. It's going to be around 2790 area. It's going to be a lot of resistance, and that's why I'm kind of holding to this call that we might get a B wave drop here. So I don't think you just buy this breakout based on the gap up this morning is the point that I want you to take away. We have Elliott wave structure. We've got Fibonacci resistance right here at the 50% retracement. You've got broken trend line. You also have the 200-day moving average. I am not a huge moving average fan. I use them when they work, but lately, guys, they've been working. So you look at the 200-day and the yellow dotted, it's really defined this whole rally for the last 2 years. We've broken below it, and we're coming back above. And what makes this 2800 even more of a hotbed of resistance is it's right on top of where that broken trend line is. So there's a ton of resistance here at 2800. I don't know if we're going to get through it the first time. If we do, if there's enough strength here in today's session to get through, that's a really strong market, and I'm going to go to work on some of those longs with my customers. So that's my game plan, guys. Again, I'll take some questions here. I'll kind of hang out with you for a minute or two. We can watch the open, but definitely check us out at tradinganalysis.com. We run our business much smoother than I run this webinar. But considering I was up most of the night watching the election, we just had a baby, I think I did pretty well, wouldn't you say? So anyways, check us out at tradinganalysis.com. We could do get you on our email list with this pop-up if you want to get our content, learn about our premier subscriptions right there. We offer trading analysis and alerts in stocks, stock options, Forex, and cryptocurrencies, which don't move anymore. But maybe they will someday. So check us out at tradinganalysis.com. Also, if you go to YouTube, you're already on YouTube. I've got a lot of kind of vlogs, fun videos. I like doing the video stuff. I think it's really, really fun. It's a nice artistic expression here. So you just go to YouTube / Todd Gordon. Be sure to subscribe. It'll offer you subscribe. This is what we're in right now. Previous live streaming. I've got some fun vlogs, kind of life of what's going on here, trading with the housewives. JC, Bob Prechter. I'm going to put a video up when I was out hanging out with the team at Elliott Wave International, actually drinking beers out in the boat with Bob Prechter. I don't think a lot of people have that footage. Hopefully he's not mad at me for putting that up. But so check that out, and that's that. So let me just take some questions here, and questions, comments, insults. Oh wait. Good evening, good morning, traders. This is your roundtable discussion, post-election results, 2018. All right, just kidding. Kidding. Wait, let me try this one. Watch this. Oh, it should switch. Oh, there we go. Pretty cool, huh? I got to get myself in the middle. All right, I'll stop screwing around. All right, what do we got? Questions. Great question there. What do you think the minimum time frame which is worth to trade? Harry S. What a great question that is, Harry. Time frame. This is a really important question. I'll stick with you here. I'll answer a couple questions here. Time frame is a function of the risk you're willing to take on your particular position. As I look at a chart and as I look at a chart and say, okay, so we're opening at 77 here. Let's say I think I want to short the S&P with stops above 2800 based on all the analysis I said. That's going to require you to take a 23-point stop in the S&P, or you can do it in the SPY or SPY options or SPX puts, or however you want to do it. If 23 points for your particular risk and trading style is too much, that's not the time frame for you to trade. You need to find a time frame that offers trading setups according to your chosen methodology that is within your risk tolerance for your personal trading account. Now, if you're skillful enough and you say, I normally don't want to risk 23 points in the S&P, but I can go and short 50 shares of SPY and I can risk whatever, that couple $100, and you're skillful enough position size, then you can trade that time frame. time frames that you trade will also shift based on the volatility or realized range of a market. The more the realized range, usually the smaller the time frame chart you're looking at. If volatility compresses, usually going to be looking at bigger time frame charts. So what I would say to that is don't always be a one time frame trader. Like, I'm always trading 60-minute charts. No, because there's going to be some markets that have huge 150% expected volatility over the next year, which is going to look totally different than a boring chart like Clorox on a 60-minute, which has probably a 20% expected move over the next year. So realize what your realized volatility is and the ranges on your charts. Then decide on the setups on those charts how much money you're going to risk for your particular trade. And if it's acceptable, that's the time frame for you. So it's a very important question to answer, which is what's the right time frame for me? It's a function of risk you're willing to take, and that's something you really got to know the instrument you're trading and know what your risk is on a trade. We work very hard at trading analysis for Art of the Trade, which is account risk and trade management. It's something we teach our members a lot and really they struggle with it, but we really hammer on them to say, what's your risk? We size every trade according to a tier. Tier 1, 2, 3, or 4. 4 is the lowest conviction. Tier 1 is the highest conviction. So you might be sorry you asked that question, but it's a really important one. Thank you, Michael, very much. Oh, you know, I meant to talk about weed stocks. Yeah, weed stocks are bid after the election. And Tilray, I thought, was looking pretty good. Let's take a look. Let me take a look at my SPX positions first. Am I making money? I am. I am indeed. Okay. Weed. Marijuana, cannabis stocks. Okay. Ooh, yeah. Okay. I think Tilray looks pretty good here on a wave 4 pullback. So it's really just a nice A, B, down and C, kind of a zigzag kind of pattern. Could be wave 4 that squares up against that wave 2. Beautiful wave 3. So we're looking at orange 4 for a wave 5 move up. You know, if you can start to break above 115 area here, tight stops below 84. Again, that conversation we just had on risk. Can you afford to risk $30 of a stop? You know, that's 30 or 25% of the underlying. Is that too much for you to risk? If so, this daily chart is not for you. It's not the time frame for you to trade. You got to get down and trade like the 1 hour chart. Okay, and say, all right, where's a little setup here? Maybe I could try to see if this breakout holds, put a stop below 102. Now I'm risking $11. If that's within your risk parameter, then perfect. Yeah, guys are asking me about NVIDIA. I'm trying to ignore that question. NVIDIA just looks terrible. It looks terrible. It's my horse in the 2018 CNBC stock draft, but the chart looks terrible. I don't know. 3 waves down. Trying to kind of hold here a little bit. It's so ugly. Huh. Very, very choppy through most of 2018, and then just got wrecked, and we're coming back. So it's got a little bit of a little pennant kind of flag kind of pattern here. If it wants to go to 220, you know, we could get a ride to 248 in NVIDIA. It's okay, but I think there's better opportunities out there. JP, interesting. Financials are actually doing well, which is surprising. This is going to be a trade I'm going to do with members. This JP Morgan's chart has held up really well, whether it's a flat or a triangle. Don't know, don't really care. I'm going to kind of layer a butterfly up into this wave 5 zone around 120. Pretty good risk reward there on JP, and I'm surprising how well financials are doing following this result. Let me take a look at how the sectors are doing. I'll pull this over. What I do is I just sort them by percent change. So XLE, look at healthcare. Ooh, healthcare's up. They're taking it well. 1.5% on healthcare. Energy's up 1.85. Technology up 1.3. There's the S&P. consumer discretionary, materials, transports, communications, financials, real estate, industrials, utilities, and staples. That's a pretty healthy tape there. I like XLV, as I mentioned. Healthcare looked good coming in. I'm surprised how strong financials are. That's interesting. Let me pull up the XLV chart, and then I'll answer a couple more questions, and then we'll sign off. Oh, and plus I have a cold on top of everything else. I don't know if you guys can hear it, but I also have a cold. As if I needed anything else to pack into this week. Okay. So off of the weekly, here's XLV. Just a simple, nice ABC pullback there, and XLV. C equals A at 86. We did a triple test of the 100% C versus A, and it's just been off. Nice little breakout here, almost a little cup and handle, little pattern there through 90. That looks pretty solid for a move up to the highs. So XLV looks good. Healthcare looks good. Financials act well. Energy, there's some stocks that I like longer term. I don't like how crude oil is getting hammered. Chevron is one that I'm looking for in a longer term portfolio project that we're doing. So I think there's some opportunities. Disney is on the verge, I think. Shake Shack is trying to hold on to support there. Lulu is one that I'm going to put to work as well. Lululemon looks good on this ABC pullback. Sort of an inverse kind of head and shoulders here into the C wave support in Lululemon. I like the looks of that one. If we can get a push up in Lulu, so there's some trading to do in here. So I'm going to go to work. Oh, Tesla. Yeah, I'll show you Tesla. Tesla looks good. Tesla looks really good. I've got a count that just scary how bullish it is, and I'm not letting the fundamentals influence my count. It's been through 14, 15, and 16. It's been just morbidly range bound, horribly range bound. We just did a big ABC. Here's where they're all calling for Elon's head, smoking a joint on Joe Rogan podcast and mocking the SEC on Twitter. All they could get on Tesla downside was a push to 250, and here we are, 344 bid. So I don't see any reason we shouldn't be up through the 386 highs in Tesla. I'm bullish on that as well. Down to the intraday on the 4-hour. I don't have anything that... Actually, I do now. Never mind. Wave 4 completion. Triangle completion. Almost. I can almost count a triangle there for a push up in Tesla. So there's an entry there. Sean, what's up, buddy? We have a famous options trader in our midst. Sean, what's up, my man? Sean McLaughlin. Were you here the whole time? Did you see me screw up earlier on? Bitcoin, I'm not going to do. What other questions? And if you ask them above, just put them in, because I'm going to try to scroll them down there a little bit. Hey, Sean, while you guys are putting questions, I'm gonna wind this down and kind of shoot the breeze. Sean, check this out. Watch this. Ready? Bam! Welcome to the nightly news. Pretty cool, right? And I can go in. I want to talk about your feelings as a trader. Throw some other questions in. Okay, cool. All right, guys. I think that's about it. Here's what my mess looks like. So thanks for joining us. As I said, we're just getting started, having some fun with this. I'm going to make it a real show eventually. I don't know when. We're going to have official guests and segments, and I'm going to have graphics flying at you and music and guests coming in, like I just was talking with Sean there, and bullish on this show in the future. So don't judge us by just this. We're just kind of getting used to streaming and in this very chaotic time in my life. So thanks for joining us. I hope you'll learn a thing or two. Be sure to subscribe on YouTube. Hit the thumbs up button. I really, really would like you guys to do that. When you go to a video, please do this. It helps us get rankings in YouTube. So when you go to the YouTube to waste hours of your life, you go And let's say, oh, I'm learning about vMix, which is the software that I'm using. And let's say, okay, I appreciate the video these guys are doing. I'm going to hit the thumbs up right there. Okay, hit that thumbs up and also hit subscribe on the YouTube channel. All right, and also, if you have any questions for next week, I do the tweeter at Todd Gordon Trade. Okay, so be sure to hit me there. This guy does some really good work. We featured him. Okay, crude oil, I like this. We put him on last week's. 1, 2, that's a really long wave 5, but he does good Elliott wave work. P-Dog, what do you got? Tesla. You know what's funny? We're just looking at a similar account. I was going to stretch wave 4 out a little bit for a triangle with one more push up to complete wave 1, but good work there on Tesla. Ron R, I'll have to check you on that one. All right. From your trading central headquarters, this has been Todd Gordon. I hope you've enjoyed our show. I wish you a wonderful rest of the trading week. We shall see you next week, 8:45. If you have ideas for the show, be sure to let us know. Put some comments below, and I'll keep working to make it better, okay? Thanks. Have a great trading week, and I'll see you guys soon. Now, how do I turn this thing off?